Hello, I'm Richard Murphy. I've been talking about quantitative easing in this video series, and I want to talk about one of the contentious issues on which economists can't agree about quantitative easing. And that is, as I've explained, the whole process requires that the Bank of England buy the government's bonds. So the government issues bonds to supposedly finance its debt. The Bank of England creates money, which it gives to one of its own companies called the Asset Purchase Facility. The Asset Purchase Facility buys the bonds, and the net outcome is effectively that the Bank of England extends an overdraft to the government. But the bonds that are being bought are still technically in existence in the Asset Purchase Facility company owned by the Bank of England, but guaranteed with regard to its financial operations by the Treasury. What does that mean? Are those bonds still in issue or not? Most economists argue that they are. The official rules of government accounting say that they are. But the truth is that in practice, those bonds are owned by a company which is owned by the government, which issued the bonds in the first place. So effectively, it's the government owing itself money. In fact, when it pays interest on those bonds, and it does still, by the way, the money goes just round in a loop. It goes from the Treasury to the Bank of England subsidiary company, the Asset Purchase Facility, who then pay it back to the Treasury. Does that imply that the bonds still exist? Well, not to me, not as an accountant. And I play both roles. I'm a political economist, I'm an accountant. And when I look at this and look at the real world view of this, which is what accountants do, I say that substantively, these bonds have ceased to exist. After all, how do you owe yourself money? I'd have no problem paying my mortgage if I owned my mortgage. You know, the money would come out of my left pocket and go into my right pocket, and it would all be very easy. That's what's happening here. So this debt does not really exist because no third party is owed it. And the interest due on it does not exist because it simply leaves the Treasury and goes back to the Treasury. So why does the government pretend that these bonds are still there? Well, they keep saying that one day they might resell these bonds back into the financial markets. Why do they do that? Because they want to say, and you've heard this many times, that one day we'll have to pay for the coronavirus crisis. That's what they mean, that we'll have to sell these bonds back and somebody will have to buy them. And when they buy them, they will take money out of circulation in the economy at that time and reduce the level of economic activity and so literally impose a cost on us all for reselling these bonds. Is that sale of bonds back to the market ever going to happen? I will give you an honest, straightforward answer. It is no. It is never going to happen. And how confident am I of my answer? I am 100% confident of it, whatever the Governor of the Bank of England says, because even governors of the Bank of England can make purely political statements to pretend things that aren't true. If he wishes to sue me, please feel free. I know he won't. Why? Because we've never sold a bond subject to quantitative easing back to the market, ever. And there is no sign that we will, because we're going to be issuing hundreds of billions pounds more new bonds to be subject to quantitative easing over the next few years. Not less than £100 billion a year for the next 4 years is what I predict. So if we're buying more and more bonds, the chance that we're going to sell any back at any time in the foreseeable future, or frankly ever, as I suggest, is zero. In that case, my argument is it's time for the government to be honest. And the honesty is to say these are not part of the national debt. What instead is part of the national debt is something quite different. And that something quite different is money. And the money is the cash that they've injected into the economy to make it work. Now, who has that money? Well, actually, that money belongs to some organisations you know. They're called banks. Literally, every single major bank in the UK has an account with the Bank of England. It's called a central bank reserve account. You can't have one, they can. And a central bank reserve account is the bank account that they have to manage their relationships with the government as a whole. And when money through the quantitative easing process is injected by the government into the economy, because that is its purpose, it is to keep the economy going round that they do this, then it goes through these central bank reserve accounts. And effectively, that's recorded as these banks holding money on deposit with the Bank of England. That's how it works out, because they were the mechanism for selling the bonds back. And they've got hundreds of billions of pounds on these reserve accounts. And we're talking about Barclays and HSBC, Lloyds and NatWest, Santander, and so on, all of them. How do you repay those loan accounts? Well, actually, they can't. If, for example, Lloyds decided that it wanted to clear down its central bank reserve account, in effect it could, but only if one of the other banks was willing to take it over. They could transfer their balance to another bank, but they couldn't actually change the overall sum owing to and from the government. Only the government can do that. It can do it by either selling bonds back, but I've already told you it's not going to do that, or it could increase taxes and demand money back from the economy that way. Well, I've got to be honest as well and tell you, there's not going to be much chance of increased taxation for some time to come, because the economy is in poor state. So these balances are going to sit there. They are, quite simply, money. Do we have to repay that money? No, because it's cash. And therefore it's just functioning money. Do we have to worry about it? No, because the banks need it to operate. Is this cause for any concern then? No. Are there gilts an issue? No. There's just money. And money, in this context, is a flipping useful thing. It's keeping our economy going. Let's not worry about this. Let's not worry about the debt. We don't have to repay it. The interest paid on it is 0.1%, which is less than inflation. So in fact, it's going down in value. It's not costing us anything in real terms. And the consequence is our economy is still working. Let's celebrate that instead of pretending that we're going to crush the economy in the future by trying to sell back gilts, which will never be put into the market. Let's not pretend that we're going to actually literally put us all into hardship to achieve this goal, to try to force money out of our banks, which would therefore threaten their viability in due course, which would be a terrible thing for us all if we had another banking crisis as a consequence. And instead, let's accept the reality. Our government can make money at will to keep our economy going. It should acknowledge the fact, it shouldn't pretend otherwise, and let's celebrate the fact that this is possible, because otherwise we would not see our way through this crisis. Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, @RichardJMurphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.